Chalo. Final essay. Essay 570 going concern. Do you want anything else you want me to cover? No, sure. Pakka, cool. Take it. 570 going concern, going concern, going concern. It is one of the fundamental accounting assumption. What? The company has a going concern, has a foreseeable future. When I do like this, it is foreseeable future. Generally, it is always considered that the company has a foreseeable future until and unless the contradictory is proved. But if it is proved that there is no future, then we prepare the financial statements on a dash basis, liquidation basis. What are those? Entire thing RMN, entire thing RMN. What are the three reasons where we can say that going concern is not right? One, either the intention of the owners is not to continue the business, or there is a necessity of liquidation by the company is not able to earn anything. And last one, slowly the company is curtailing matlab reducing, and that too not slowly matlab little, materially the scale of operations. I gave an example also, high value insulation private limited, tape industry. They were selling tapes. Take in my real life audit I did, they were having a turnover 3 years back 20 crores, then it came to 10, then it came to 5. Current year when I did the audit, zero turnover. So they have reduced their operations, turnover became zero. And the year which I did the audit, they sold all their assets. They sold all their assets. So definitely there is no going concern because they were manufacturing tapes. They have sold all the plant and machineries. Correct or not? Where is the going concern? How will they sell tapes in the next year? Correct or not? Yeah. Okay. So you know this thing that it is an accounting, fundamental accounting assumptions. And if it is going concern is not right, they have to prepare the entire financial statements on a liquidation basis. Am I right? Correct. Then enter thing RMN, this also RMN, coming directly over here, very important. Write it in bracket over here for 2.2. Management's responsibility. You would have already written, I guess. Primary responsibilities of the management. Are you think and tell me, Ray? Now only we did today. Responsibility of the management, chapter 8. Preparation, presentation of FS, design and implementation of internal control, and going concern. The primary responsibility to check whether the company has a going concern or not lies with the management. They have to do that primary preliminary assessment. That preliminary assessment only we are going to check. Who is going to check? Auditor. Because that going concern, they are based on some assumptions. Those assumptions we are going to check. Correct or not? We're going to ask various inquiries to the management. We're going to check the data on which they're telling we have a going concern. Are you able to understand? First point, they're going to talk about management's responsibility. What is their responsibility? It is their management's responsibility to make the going concern assumption. That judgment which they are making, that judgment is based on various factors. What are those factors on which the management will make that judgment? First one, they have to consider the degree of uncertainty regarding any future event or outcome. If there is a big case on the company, big litigation on the company, they'll have to determine today what tomorrow whether this outcome will be favorable in terms of company or unfavorable. On that basis, they're going to check the going concern. Second one, the size, the complexity, the nature of the business. Plastic companies, petroleum, people are telling no, petrol is going to be till 2030 or 40 only. Correct or not? Then in that particular near to that company, then they will have to consider the going concern. Why? The condition, the nature of the business is such that there is a problem related to going concern. And third one, if there is any judgment which the company takes about the future is always based on the information which is available at a particular point of time. Whenever the company makes a judgment about the future event, it is always based on a particular point of time. One stupid example, shall I give it to you? Reliance Industries, they made the financial statements and they told going concern irk. Definitely Reliance Industries going concern irk. Yes. They made the financial statements, auditors report, auditor signed and told going concern irk. There is no problem. Next day, earthquake, building, doom. Full Reliance Industries at Antilina came down. Now Reliance Industries, Mukesh Ambani is saying, I don't want to continue the business anymore. Can the people sue the management for it? No. You know why? Yesterday when they made the going concern assumption, everything was right. There was no problem. Next day that earthquake came, how is management responsible for it? You know why? Because going concern ka judgment which we take, we take it at a particular point of time. Yesterday everything was right. Next day the government put a big case on the company. Right, till yesterday the going concern was right, no? I cannot take going concern judgment every day. When I'm making the financial statements, at a particular point of time, I'll see and I'll make the financial statements. If on that day everything was right, I'll make the financial statements on a normal basis. Next day, if there is a problem, we'll see. Subsequent event, what event, we'll see that thing. Understood? Kya? 3 points. Then comes whose responsibilities? Auditor's responsibility. How many stages responsibility you would have written? Stage 1, stage 2. That means point number 1, paragraph 1 is the point responsibility 1. Point number 2 is the stage 2 responsibility. Stage 1 responsibility is the very common one. What? Whatever preliminary assessment the management has made, you're supposed to obtain evidence about those assumptions. Correct or not, yaar? Second one, the most important one, SA 200, inherent limitations. If you remember inherent limitations, the fifth inherent limitation, what? Future events. It is not a guarantee given by the auditor if the company has a going concern. Just because the auditor has not mentioned in the auditor's report if the company, does not have a going concern or has a going concern, it doesn't mean that we have given a guarantee. Tomorrow, if the building falls and the company cannot do anything, or there is some big event which creates some problem on the going concern, you cannot blame the auditor for it. Why? Future events. I'm not a god. It is not under my control. ठीक है ना? So just that if we have, there is the absence of that condition कि going concern is there or not, that doesn't mean that auditor is giving a guarantee about it. Understood क्या? Then objectives of the auditor, very simple. First, you obtain psi regarding what? Regarding the appropriateness of the management assessment. Then to conclude on that audit evidence, see, sometimes what happens, going concern is right, going concern is appropriate, but there is some material uncertainty in the future. There is some event which is there in the future which might create some uncertainty of the company's going concern. Today the going concern is appropriate, but there is some material uncertainty. If there is some material uncertainty in the future, auditor, you gather evidence about that also to check whether that uncertainty is going to cast a significant doubt on the entity's going concern. And last one, to report it. Risk assessment procedures, SA 315. What was SA 315? Understanding the entity, environment, internal control. So they are telling whenever auditor, you have to perform risk assessment procedures. You would have written a key also. Ask management, still ask management. Basically, we have to first check while understanding the entity environment, this particular thing, to check whether management has performed that preliminary assessment or not. You will ask this particular question to the management. Management, preliminary assessment, they do. What will the management tell? Either they will tell yes, we have done it, or they will tell we have not done it. If they have done it, well and good, sit with me, let's discuss that particular appropriate assumptions. If they have not done it, management, give me a basis. Give me a basis. You have not done the assessment, but still you have prepared the financial statements on a going concern basis. Give me the reason for it. Basically, you're still asking the management to make the assessment. First case, if they have made the assessment, well and good, let's sit, discuss. If you have not made the assessment, go and make the assessment and give me the basis for it. Why you are telling that your company has a going concern, correct, or why your company has a foreseeable future. These two things. Then this is the most important part of 570. High chances in your attempt, I'm going to see one question from SA 570. Now don't ask me which topic. I'm not God. Take care. These are those events. 3 events. One is financial, one is operating, one is other events. Take care. They will ask you directly, write down the financial events, or they'll give you one question and they'll what are the other financial events. Financial events mean anything which is related to money, paisa. If money wise the company is facing any problem, then you will write the answers of all these. These are all the examples of paisa related events. These are all examples related to business operation events. And last one, these are all events related to compliances, laws, regulations. Correct or not? Sometimes if you don't comply with the law regulation, they will put up some big penalty, 3 times of this, 10 times of this. That will also create some problem on going concern. Correct or not here? Or sometimes you don't comply, they will strike off your company's name. They will tell you to liquidate, wind up. So that is covered over here. Financial events, I told you, you have to write it in a particular order. Point number 1 is point number 1. Point number 2 is point number 2. But there is one hidden point over here in this, in the point number 2 itself. Or के बाद, that is point number 3. If you have changed अलग किया होगा तो ठीक है. You can mark this as point number 3. After this point number 3, directly you must come to this one. Inability to pay the inability to comply with terms of loan agreements. This is point number 4. Then come to indications of withdrawal from financial of creditors, point number 5. Then this one, inability to pay creditors on due dates, point number 6. Change from credit to cash delivery, point number 7. And adverse negative operating cash flow, 8. Adverse key ratios, 9. 9 points I made you mark. You would have marked 8 points because this point number 2, point number 2 you would have not marked it separately. So why did I mark in this order? If you see point number 1, point number 2, point number 3, point number 4, all are related to liabilities, borrowings. First one, net liability position. That means the liabilities are more and assets are less. Fixed term borrowings approaching maturity, but the company doesn't have any real prospects to repay those borrowings. Third one, third one is this, excessive reliance on short-term borrowings for long-term finance. Working capital, CC and all are given for your day-to-day business operation that you cannot use as a term loan. But if the company is using as such, that means company is not getting term loans from banks. Financially, the company is very poor. Then fourth one, the company is not able to comply with the terms of Loan agreements. Loan agreement letter is written every 14th you have to pay the EMI. But every month the company is making default. So these 4 points are related to liabilities. What are the other next 3 points? It is related to your creditors. First one, indications of withdrawal of financial support by creditors. Creditors earlier they were giving us time limit, credit period. Now they have stopped giving us credit period. They have changed from credit period to cash transaction. Immediately buy raw materials, pay me the money. And inability to pay the creditors on due dates. Whatever due date the creditors given 3 months may make the payment, we are not able to make the payment. Apart from this, there are 2 other points. What are those? Adverse key financial ratios that you have read in your FM, no? Net operating profit ratio, NP ratio, GP ratio, all those are if adverse. Adverse means negative, correct or not? And negative operating cash flow. Cash flow is also negative. That means too much of cash is outflowing from the company. Operating events, labor difficulties, no raw materials, shortage of raw materials, correct or not? All these points comes under operating events, and other events comes under all non-compliances of laws, regulations, proceedings against the company, litigations against the company, changes in law regulation of the company which creates a big impact on the company. Plastic ban, correct or not? It was a big problem for those plastic manufacturing companies. Their going concern came on a question mark. Why? Plastic only banned. Now if you're manufacturing plastic, khatam your business. Understood kya? Then this entire 2.6, I don't know whether I made you mark as mug or RMN. What was it?
CBQ RMN.
CBQ RMN. Entire 2.6 is CBQ RMN. What is this 2.6? Give me 1 minute. Continuing. Listen to 2.6 thoroughly. Then you can read it on your own. First point. Whenever the company is making that preliminary assessment of going concern, that means we are taking future into consideration. How much future you have to take into consideration for checking the going concern? Minimum 12 months. Minimum 12 months you have to take into consideration. The future 12 months you have to take into consideration for checking the going concern. If it is less than 12 months, but the management has made the assessment of less than 12 months, we will tell the management, please extend it to 12 months. That means minimum, it is written everywhere, it is written, don't worry. Minimum 12 months, here it is. Here it is, everything is here. Minimum 12 months, the management should make the assessment. If it is less than 12 months, we will tell the management to extend it. Next, if the management has made an assessment of 24 months, is it proper? Yes. You as an auditor, you have to check those assessment. Will you consider only 24 months or will you consider 36 months? 24 months. Whatever assessment management has made, you also make your assessment up to those money months. But only one exception. If it is less than 12, we tell the management to extend it to 12, then we'll check those 12. Understood till here? Okay. Coming here. I have told you the primary responsibility, the preliminary assessment has to be done by management. Okay, na? If there is some lack of analysis, if there is some lack of this assessment, they have not done the assessment properly. For example, instead of 12 months, they have done only 10 months. I already told you, if they have done less than 12 months, we are going to tell the management to extend it. But there is an exception to that also. We will accept the lack of analysis made by the management only when the company is, you have written only when the company is beautiful. What is the meaning of that beautiful? When the company has history of profitable operations and ready access to financial resources. Manje, focus here. Reliance Industries. If I am the auditor of Reliance Industries, really, you know Reliance Industries ka history. Super profitable. And tomorrow if Reliance Industries finds some financial crunch, they have got super ready accessible financial resources. They can sell their assets. They can, Mukesh Ambani is there, he can bring in money. Central government will give money. Easy access to resources also, no? So even if they have not done the detailed analysis, that 12 months if they have not done, if they have only 10 months analysis, can you accept the 10-month analysis? Yes, you can. Only when the company is beautiful. What is the meaning of beautiful? Profitable history and easy access to financial resources. Any doubts kya? Pakka kya? But in other circumstances where the company is not beautiful, where the company doesn't have any history of profitable operations, or where the company, in that case, we will have to tell the management, please extend the assessment to 12 months. If there is a lack of analysis, even if they have done for 12 months, but there is a lack of analysis, we will tell them to do a proper analysis, and then we are going to do our assessment on that particular analysis. We are going to ask management's plans for future actions and whether those plans are actually feasible or not. Management will tell, next year I'm going to open 2 more branches. I'm going to buy one 8 crores machinery. Hey, you don't have money to pay your salary staff. What 8 crores machinery? Take na. So whatever plans, you listen to those plans. But those plans should also be feasible. Feasible matlab possible. Correct or not, yeah? Entire 2.6 done. How much more is pending, yeah? I'll die. 2 point. Thanks. 2.7. What is 2.7? Additional audit procedures where events or conditions are identified. That means there is some event which the auditor has identified and it might cast a significant doubt on the entity's going concern. In that case, we are going to perform additional procedures. Why? Earlier that event has come, no? Now we have to perform audit procedure on that event also, no? We have to get audit evidence regarding that event, okay, whether it is going to have an impact on the company or not. So what are those additional procedures? First, check whether management has performed their assessment or not. Same, management have to perform the preliminary assessment. If not, we're going to tell them to perform the assessment. Then management will give you future actions, future plans. You have to evaluate those. Ask them to prepare the most important cash flow forecast. See, if there is an event, no, company must have money to control the impact of that particular event. Ultimately, we need this only. So tell them to make a cash flow forecast. How much cash flow is going to go out, how much cash is going to come in. Based on that, we are going to check the data of that cash flow and also the assumptions of that cash flow. How did they make that cash flow? What assumptions they have used? That assumptions we are going to check. And on what data did you make this cash flow? Previous year's data plus or minus inflation rates and all. And last one, if there are any additional facts which management has got taken in their assessment, you consider those facts also. And at last, the most important, WR, to confirm the audit evidence, confirm certain matters. You remember, support other audit evidence, correct or not? They would give this cash flow forecast and all. They would have given assumptions. At last, you take one written representative also. Whatever you told it is, you have told it. That is why you have given it as in writing. Understood? Kya? Now, this is the question for additional audit procedures for events conditions identified. See, you read it these points on a heading basis. But actually, what you're going to check, your audit procedures, what you're going to check, that is covered under this particular answer. What are those examples of audit procedures which you're going to perform when events have been identified? Understood? Kya? What are those audit procedures you're going to perform? Examples when the events have been identified. What and all you're going to check in real. Upar to you discuss in headwise. Tell management will make assessment. What assessment? That those points are given over here. Please discuss the cash flow. Please discuss the cash flow. Please discuss the entity's latest available interim affairs. I told you next year's first 3 months you take that also into consideration. Correct or not? Read the debentures, loan agreements, whether they're complying with those loan agreements or not. Then read the minutes, masala. Then inquire the entities, internal legal counsel, because sometimes if there's a big provision case on the company, management is not giving full information, then what will you do? We'll talk to the legal counsel. This one. Then coming, I made you write these 5 points and directly I came to the last 3 points, correct? Yes, last 3 points. What I tell? Confirm the existing terms adequacy of borrowing facilities, whether the company is able to get borrowings or not. If the banks have told them no, then there is a problem regarding going concern. Then obtain and review reports on regulatory actions, whether they are following all the regulations or not, laws applicable, whatever laws, regulations are applicable, whether they are able to follow them or not, and determine the adequacy of support of any planned disposal of assets. If the company is planning to dispose their assets, question mark, correct or not? Yeah, that means they don't have any money. 2.8 bogus RMN. 2.9, what is it? 2.9, 2.10, 2.9 and 2.10 focus what I'm trying to do. Adequacy of disclosure when events or conditions have been identified and the material uncertainty exists. Read that again. Adequacy of disclosure. After the word disclosure, put an upper arrow mark and write in FS. In FS. FS means financial statements. After the word disclosure, put an arrow mark here and write in FS. So adequate disclosures have been given in the FS when events conditions have been identified and material uncertainty exists. Read the next heading 2.10. Adequacy of disclosure when events and conditions have been added, but no material uncertainty exists. No has been added here. Okay, so here they're telling, if the auditor concludes it, what? Management use of going concern is appropriate. No problem in going concern. Proper financial statements going concern. But there is a material uncertainty. In that case, please check. What do you have to check? Adequate disclosure of that event has been made in the financial statements. Why? Users we have to tell them, no? There is a material uncertainty, and disclose it clearly in your auditor's report that there is a material uncertainty and there can be a chance that the company might not be able to realize its assets and discharge the liabilities in the normal course of the, write this statement, the company might not be able to realize its assets and discharge its liability. Understood kya? 2.10 you can read it on your own. 2.11 focus important. 2.11 focus important. Now we're going to learn about impact on the report. Impact on the report. What regarding going concern? Focus. If the company's going concern is lifted, that means the company doesn't have any going concern. But when the going concern is lifted, they have to prepare the financial statements on a dash basis.
Liquidation.
But they did not prepare on liquidation basis. They prepared on a normal basis. Can I tell the entire financial statements are wrong? Misstatement is at which level?
Financial.
Overall financial statement level. Whenever it is at overall financial statement level, will you perform any procedures? Is it of any sense? Directly give one opinion. What is that opinion? Why adverse? You have audit evidence in hand and it is pervasive. Oh, adverse opinion. You have got evidence. No, what? Financial statement itself is an evidence. And that going concern ka events and all, you have evidence in your hand. And it is pervasive also. Why? Entire financial statements are wrong. Now we are able to relate that chart of that thing here. Yes. Then, second case, if use of going concern basis is appropriate, going concern is appropriate, but the material uncertainty is existing. If that is the case, two things, two situations. What are those two situations? So, same two situations. Material uncertainty, that event has been disclosed in the FS by the management, or it has not been disclosed by the management. Listen to me properly. Going concern appropriate. Going concern appropriate. But there is a uncertainty. There is some event. Now that event, either the management, if it is honest, they will disclose it in the FS. If they want to cheat, they will not disclose in the FS. Those are those two situations. First one, adequate disclosure is made. Adequate disclosure is not made. Think and tell me where going concern is appropriate. There is a material uncertainty, but they have disclosed in the FS. Think and tell me, is the management anywhere wrong?
No.
No, they disclose everything. No, chup chap given
Unmodified.
opinion. Chup chap given unmodified opinion. But yes, there is some material uncertainty. No, there is some problem. No, so in your report, add one heading. What is that heading? Material uncertainty related to going concern. Add this heading and please write something. What is that? First, give a reference to that note because that disclosure is given in the FS. Give a reference and state it that auditor's opinion is not modified because of this particular event. Understood kya? Then comes the second one. Disclosure is not given. Now there is some problem in the management's FS. In that case, either you give qualified or you give adverse. Both you have got psi. They have not made a disclosure. You have a psi in your hand. Correct or not? Yeah. So if it is pervasive, adverse. If it is not pervasive, disqualified. The disclosure we'll see, no, whether the disclosure is pervasive or not. If it is pervasive, adverse. If it is not pervasive, qualified. And in the basis for adverse or qualified. Why did they use basis for qualified adverse? I told you, whenever the opinion changes, the heading also should change. So the heading has to be changed and they have to write it that there is a material uncertainty which might cast a significant doubt and it is not adequately disclosed in the financial statements. Understood kya? Then management is unwilling to make or extend its assessment. I told you, minimum assessment which the management has to take is how many months? 12 months. They made only for 6 months. What will you tell? You will tell the management, please extend it to 12 months. What if they are not ready to make that assessment? Not ready to make or not ready to extend. Either they are not making it or they are not extending it. I told you, primary responsibility of going concern is with the, if they have not done the assessment, what will you check? Yeah, because primary is their responsibility. So if that is the case, either give a qualified or give a disclaimer, because here we don't have psi in our hand because they have not made the assessment. You cannot check anything. You don't have psi in your hand. So you'll have to give either qualified or you have to give a disclaimer. Depends on whether that statement is pervasive or not pervasive. Understood kya? Beautifully SA 570 also covered. With this, we are done with our fast track batch.